You think profitable traders know some hidden formula, some secret signal, some special whisper from the market that you do not hear. That is the first mistake. The real secret is not something added to your trading. It is something taken away. It is the removal of noise, the removal of constant action, the removal of your need to be right every hour of the day. You have felt it before, that urge to act. The market opens and you feel it calling you. Prices move a little and your heart moves with them. A small push-up feels like opportunity. A small drop feels like danger. You tell yourself, if I don't get in now, I'll miss it. So you trade, not because the market is ready, but because you are restless. You have watched the screen for hours waiting for something to happen. Then a small flicker appears. It is not much, but it is movement, and movement feels like permission. You jump in. Sometimes it works for a few minutes. That small gain makes you feel sharp. You think you are in tune. Then the market turns quiet again. Or worse, it turns against you. And now you are not just restless, you are emotional. You add another trade, or you reverse, or you double up to make back what you just lost. By the end of the day, you have been busy, very busy, but your account tells a different story. The truth is this: the market does not pay you for activity. It pays you for being right at the right time. And those times are rare. You have to understand something that most traders refuse to accept. The big money is not made in the small, meaningless swings. It is made in the clear, powerful moves when the line of least resistance is obvious. But those moves do not show themselves every hour. They do not care about your schedule. They do not arrive because you are bored. They come when they come. And your job is not to chase them. Your job is to wait for them. Sitting tight is the hardest thing you will ever do in this game. Harder than analyzing, harder than entering, harder than exiting. Because sitting means doing nothing while everything inside you screams to act. You watch price move without you. It ticks up, it ticks down. You imagine what you could have made. You imagine what you might miss. Your mind starts creating stories. This could be the big one. What if it runs without me? So you act to quiet that voice. But the profitable trader has learned to live with that voice without obeying it. He knows that most movements are noise. He knows that if he trades every fluctuation, he becomes part of the crowd. And the crowd, as you have seen time and again, is usually wrong at the important turning points. You have felt the sting of chasing a breakout that fails. You have bought because everyone seems excited. You have sold because panic spreads. And right after you act, the market reverses. That is not bad luck. That is you trading emotion instead of structure. The secret is simple. Painfully simple. Trade less. Wait more. When you see nothing clear, do nothing. When price drifts sideways, let it drift. When the market is confused, you must be still. Money is made by sitting, not by trading. You sit through the noise. You sit through the false starts. You sit through the chatter of other traders who claim to see opportunity everywhere. And when the real move begins, when the market shows strength or weakness with conviction, when price pushes in one direction and holds, when pullbacks are shallow and the path is clear, then you act. And once you act, you sit again. You do not jump in and out at every tick. You let the position breathe. You let the trend do its work. You resist the urge to grab small profits just to feel safe. That kind of patience feels unnatural at first. It feels like laziness. It feels like you are missing out. But over time, you will see that most of your losses came from overtrading, from forcing trades in dull conditions, from confusing motion with opportunity. The market rewards the patient predator, not the nervous hunter firing at every rustle in the bushes. But once you slow down, once you begin to trade less, you run into a different enemy, a more dangerous one, yourself. You think you are rational, you think you are logical, but when money is on the line, you become something else. You have seen it. You enter a trade with a clear plan. You know where you are wrong. You know how much you are willing to risk. Then price moves against you. At first, it is small. You tell yourself it is normal. Then it moves a little more. Now you feel it in your chest, that tightness, that refusal to accept being wrong. You start looking for reasons to stay. You search for opinions that agree with you. You ignore what the tape is telling you. Hope replaces evidence. That is how smart people lose money. You do not lose because you are foolish. You lose because you are human. Impatience tells you to enter too soon. Hope tells you to stay too long. Fear tells you to exit winners too early. Greed tells you to hold losers too long. Ego tells you that the market must respect your opinion. The market respects nothing. It moves according to supply and demand, according to pressure, according to the actions of millions of participants, most of whom are driven by the same emotions you are. You have added to a losing position before. You have told yourself, it's cheaper now, it has to bounce. You have watched it go lower and lower and lower. Each addition feels like courage, but it is not courage. It is refusal to accept a mistake. The profitable trader does not argue with the tape. He does not need to win every argument. He needs to preserve his capital and his nerve. You must learn to spot the moment when emotion begins to override judgment. It happens fast. You take a loss, small, clean, but it irritates you. You feel that sting. You think, I'll make it back quickly. That thought is poison. The market does not owe you recovery. It does not care about your last trade. When you feel the urge to trade immediately after a loss, pause. When you feel the rush after a win and the desire to press harder, pause. Because both states are dangerous. After a win, you feel invincible. You increase size. You loosen discipline. You think you see patterns everywhere. After a loss, you feel desperate. You rush. You force setups. You want relief. In both cases, you are no longer objective. The secret profitable traders know is not mystical. It is disciplined self-awareness. They know their weak moments. They know the signals inside themselves, the racing heart, the tightened jaw, the frantic clicking. When those signals appear, they step back. You must become a watcher of your own mind. When you feel the fear of missing out, ask yourself, is the market truly offering a clear opportunity, or am I afraid of being left behind? When you feel the urge to hold a loser, ask, is price confirming my idea, or am I clinging to hope? When you feel the desire to take quick profits, ask, is the trend still intact? This inner dialogue is not soft. It is stern. It is honest. It cuts through excuses, because excuses are expensive. Once you begin to see how much of your trading is driven by impulse, you will understand why having your own game matters more than copying anyone else. You have followed tips before. You have listened to louder voices. You have jumped into trades because someone else sounded confident. And when it fails, you feel not only the loss of money, but the loss of control. The profitable trader builds his own method, not complicated, not full of fancy signals, just clear rules based on how price behaves. He studies how markets move when they are strong. He notices how pullbacks behave in an uptrend. He observes how rallies fail in a downtrend. He keeps it simple. If price is pushing higher and holding gains, he looks to join strength. If price is sliding lower and rallies are weak, he looks to join weakness. He does not trade in the middle of confusion. You must write down your reasons for entering a trade, not in your head, on paper, clear, simple. Why are you entering? What must happen for you to stay? What will prove you wrong? When you define these before you act, you remove much of the emotional fog. And when you review your trades, do not just look at profit or loss. Look at your thinking. Were you patient? Did you wait for confirmation? Did you follow your own rules? Or did you act because you were bored, because you were afraid, because you wanted action? The market will test your discipline daily, but if you have a simple, repeatable approach, you can anchor yourself. Without that anchor, you drift from strategy to strategy, from indicator to indicator, from one guru to another. Consistency comes from doing the same thing over and over under similar conditions. You cannot measure improvement if you change your method every week. Choose your approach, keep it simple, trade it small at first, and stick to it long enough to understand its rhythm. And when you enter lightly. This is another secret that many ignore. You do not need to bet everything on your first idea. You can start with a small position, a probe, a feeler. If the market confirms you, you can add. If it proves you wrong, your loss is small, clean, manageable. Never average down on a loser. Never increase size to prove a point. When you are wrong, admit it quickly. A small loss is tuition. A large loss is a scar. You must protect your capital as if it were oxygen, because in this game, it is. Without capital, you cannot play. Without nerve, you cannot act when the opportunity finally arrives. Set your exit based on what price does, not what you hope it will do. If price breaks below a level that should have held, get out. If price fails to follow through in the direction you expected, step aside. Do not wait for disaster. And when you are right, let it work. You have taken profits too soon before. You have watched a trade move strongly in your favor, then pulled back slightly. Fear of losing gains made you close. And then it continued in your original direction without you. That is because you were trading your emotions, not the market's behavior. If the trend is intact, if price continues to show strength, sit. You do not need to capture every tick, but you must give the market room to reward you when you are right. The large gains come from the few trades where you align with a real move. If you cut them short, you cripple your edge. Small losses, occasional big wins, that is the formula. Not constant wins, not perfection. Accept that you will be wrong often, but wrong small. And when you review your losses, do not curse the market. Ask yourself, was my idea flawed, or was my execution careless? Did I enter too early? Did I ignore a warning sign? Did I violate my own rule? If the loss came from following your plan and the market simply did not follow through, accept it calmly. That is part of the business. If the loss came from impatience or ego, learn from it. The market is a harsh teacher, but it is fair. It punishes the same mistakes again and again until you stop making them. You become stronger not by avoiding losses, but by refusing to repeat the same error twice. That is how you grow anti-fragile. Every mistake, when studied honestly, sharpens your judgment. Every setback, when handled without drama, builds resilience. You begin to see patterns not only in price, but in your own behavior. You notice that you trade poorly when tired, or after arguments, or when trying to impress others. So you adjust. You trade smaller, or not at all on certain days. This is not weakness, it is professionalism. And as months turn into years, you begin to understand the long pull. There will be stretches where nothing clear appears. Markets drift, trends stall, volatility shrinks. In those times, the impatient trader forces action and bleeds slowly. The seasoned trader waits. He knows that conditions change, that dull markets eventually give way to powerful moves, that panic and euphoria return in cycles. He preserves his capital and his nerve for those moments. He does not need daily excitement. He needs opportunity. You must learn to be comfortable with inactivity, to sit through flat periods without doubting your method, to watch others boast about quick wins without chasing them. Because when the real move begins, when the crowd is caught off guard, when the tape shows unmistakable strength or weakness, you will be ready. You will not be exhausted from overtrading. You will not be wounded from reckless losses. You will be clear, and you will act with calm conviction. This game is not about brilliance. It is about endurance. It is about surviving long enough to catch the few big moves that make the year. It is about mastering yourself so completely that the market no longer provokes you into foolish action. You become selective, patient, quiet. You stop trying to outsmart the market. You align with it. You stop fighting noise. You wait for clarity. You stop measuring success by how often you trade. You measure it by how well you execute when it matters. And one day, without fanfare, you realize something has changed. You are no longer chasing every tick. You are no longer arguing with price. You are no longer devastated by small losses. You sit more. You trade less, but your results improve. Not because you found a magical secret, but because you removed the habits that kept you from seeing what was always there. The market has not changed. You have. You have learned to wait like a predator, to strike only when the path is clear, to cut quickly when wrong, to ride calmly when right. You have learned that the real opponent was never the market. It was the restless, fearful, hopeful part of yourself. And by mastering that, you have unlocked the only secret that matters. Now you play your own game. Now you let the market pay you. And you do it without noise, without hurry, without drama. Just patience, discipline, and quiet confidence built over time. That is what profitable traders know. And now, so do you. But knowing it is not the same as living it. You can nod your head to every word about patience, discipline, small losses, and big wins. You can repeat the rules like a prayer. And still, when the market opens and price begins to move, you feel that old pull, because the market does something to you. It promises freedom. It promises independence. It promises that one good trade can change everything. And when you sit there watching it tick, you feel like you are standing at the door of possibility. That is why this game is so dangerous. It does not just test your intelligence, it tests your character. You have stared at a chart and felt your heart race. You have seen a sudden move and thought, this is it. You have clicked without fully thinking because the move felt urgent. And when it goes your way, even for a few moments, you feel powerful. That feeling can hook you. You start chasing that rush, not the edge, not the clear setup, the rush. And once you begin trading for emotion instead of logic, you are lost. The profitable trader knows this. He knows that the greatest danger is not ignorance. It is overconfidence mixed with emotion. After a strong win, you feel sharp. You think you have the market figured out. You increase size. You loosen discipline. You trade conditions that do not truly fit your method because you believe your instinct alone is enough. Then the market shifts. It always does. And when it does, it takes back what it gave, often with interest. That is when you feel confusion. How could you be so right yesterday and so wrong today? Because yesterday the market conditions fit your approach. Today they do not. Markets change character. Sometimes they trend cleanly. Sometimes they whip back and forth. Sometimes they barely move at all. If you treat every day the same, you will suffer. You must learn to read the mood of the market before you risk your capital. Is price moving with strength and follow through, or is it jerking back and forth with no direction? Are pullbacks shallow and brief, or deep and messy? If you cannot clearly answer those questions, you have no business trading size. The profitable trader adjusts to conditions. He does not demand that the market behave according to his wishes. You have tried to force trades in dull markets before. You have convinced yourself that something big is about to happen because you are tired of waiting. And when nothing comes, you bleed slowly. That slow bleed is more dangerous than a sharp loss because it drains your confidence. A quick loss teaches you something. A slow, grinding series of small mistakes makes you doubt yourself. That doubt leads to hesitation. And hesitation leads to missed opportunity when the real move finally appears. So you must preserve not only your capital, but your belief in your own process. This means stepping aside when nothing is clear. There is strength in doing nothing. Most traders think strength means bold action, big size, fast decisions. Real strength is restraint. It is watching a market move without you and not flinching. It is seeing others boast about gains and not feeling the need to prove yourself. It is taking a clean loss and moving on without revenge. You must understand that the crowd is driven by urgency. The crowd hates missing out. The crowd buys near highs out of excitement and sells near lows out of fear. If you think like the crowd, you will end up where the crowd ends up. The profitable trader studies the crowd. He watches the emotional surges. He sees when price runs fast because everyone is chasing, and he waits for the exhaustion. You have seen it. A stock runs hard for days. Everyone talks about it. Social feeds are full of excitement. It feels unstoppable. Then one day, it gaps up again. Early buyers cheer, late buyers rush in, and suddenly, it stalls. It cannot push higher. It wobbles, then it falls. That is not random. That is emotion reaching its limit. When everyone who wants to buy has already bought, who is left? When everyone who wants to sell has already sold, what pressure remains? You must learn to sense these extremes, not with indicators, with observation. When price accelerates unnaturally, ask yourself, is this sustainable or is this emotion? When panic spreads and price collapses quickly, ask, is this fear at its peak? This does not mean you blindly fade every fast move. It means you respect that emotion creates opportunity for the patient. The profitable trader is not swept away by excitement. He watches it build. He waits for confirmation that the move is real or that it is ending. And when he acts, he does so with clear reasoning, not adrenaline. Another truth you must accept is that not every day is yours. You cannot extract money from the market every session. There will be days when your approach simply does not align with what price is doing. On those days, the best trade may be no trade. That requires humility. You must accept that the market is bigger than you, that you are not entitled to profit. When you sit out a day because nothing is clear, you are not weak, you are disciplined. That discipline compounds. Over time, by avoiding bad conditions, by cutting losses fast, by letting winners run, You create a gap between yourself and the average trader. The average trader seeks constant engagement. The seasoned trader seeks high-quality opportunity. There is a difference. You do not need to win often. You need to win well. Think about your biggest gains. They did not come from frantic activity. They came from a clear move that you caught and held. But how many times have you cut that kind of move short because you feared giving back profit? You watched price climb steadily. You felt good. Then it pulled back slightly. Not much. Just enough to make you uneasy. You told yourself, I'll lock it in. You closed. Then the market resumed its climb. That happens because you focus too much on the small fluctuations and not enough on the bigger picture. You must decide before entering what kind of move you are seeking. Are you looking for a quick reaction, or are you positioning for a larger trend? If you want the larger trend, you must tolerate normal pullbacks. You cannot demand a straight line. The profitable trader understands that discomfort is part of holding a winner. He expects it. He does not interpret every dip as danger. He watches the overall structure. As long as the market behaves according to his thesis, he sits. And if it truly breaks that structure, he exits without drama. No pleading, no hoping, no arguing. This clarity comes from experience and from reviewing your own behavior honestly. You must study not just charts, but yourself. After every trade, ask, did I act from fear, from greed, from boredom, or from logic? Act, act, act. If you cannot answer that honestly, you will repeat your mistakes. There is a kind of quiet maturity that develops when you stop blaming the market. At first, every loss feels unfair. You think the market is manipulated. You think you were unlucky. But over time, if you are honest, you see that most of your losses came from your own impatience or refusal to accept being wrong. That realization is painful, but it is also freeing. Because if the problem is you, then the solution is also you. You cannot control the market, but you can control your size, your entries, your exits, your decision to trade or not trade. That is enough. Once you truly accept that small losses are the cost of doing business, you stop fearing them. And when you stop fearing them, you stop holding them. That is a turning point. The market begins to feel less threatening, because you know you will not let one trade damage you deeply. You become calm, and calm traders see more clearly. They see when a move is genuine. They see when it is weak. They feel the rhythm of price without being pulled by every tick. This rhythm is not mystical. It comes from repetition. Years of watching price move, years of observing how trends build and break, years of seeing how the crowd behaves at extremes. You cannot rush this. You must endure the quiet years, the slow learning, the small accounts, the modest gains. Many traders quit before they reach this point. They expect fast success. When it does not come, they blame the market or themselves and give up. But those who stay, who treat this as a craft, begin to change. They no longer feel urgency. They no longer need to prove anything. They wait for the market to show its hand. And when it does, they act with conviction because they have protected their capital and their confidence. This is the long pull. It is not glamorous. It is not filled with daily excitement. It is filled with discipline, with restraint, with quiet observation, and over time, it transforms you. You start to think differently, not just in trading, but in life. You become less reactive, more patient, more selective. You understand that not every opportunity is worth taking, that preserving your energy matters. The market becomes less of an emotional roller coaster and more of a business. You show up, you assess conditions, you act only when there is edge, you step aside when there is none, and when the big opportunity comes, you are ready. You are not overextended, not emotionally drained, not financially wounded. You are steady. That steadiness is the real edge. Anyone can learn a setup. Few can master themselves, and in the end, that is the only secret there ever was. The profitable trader is not special because he knows something magical. He is special because he has trained himself to wait, to cut losses without hesitation, to ride strength without fear, and to stay out when nothing is clear. He has learned that the market is not his enemy. His impatience was, his ego was, his need for constant action was. Once those are tamed, the game becomes simpler. Not easy, but simple. You sit, you wait, you strike when the odds favor you, You protect yourself when they do not. You let time and discipline do the heavy lifting, and slowly, almost quietly, the results follow. You no longer feel the need to chase every move. You no longer fear being wrong. You no longer panic at pullbacks or rejoice at every small gain. You become measured, and in that measured state, you find consistency. Not perfection, consistency. That is enough. Because in this business, consistency over years beats brilliance for weeks. The market will continue to tempt you. It will continue to test you. It will continue to offer noise disguised as opportunity. But if you remember what truly matters, if you guard your capital and your nerve, if you trade only when the path is clear, you will endure. And endurance is what separates those who survive from those who disappear. You do not need a secret formula. You need patience, discipline, self-awareness. You need to trade less, think more, react less, observe more. You need to become the kind of person who can sit still while others are frantic. That is the transformation. And once you have it, the market no longer controls you. You operate in harmony with it. You let it reveal its intention. You follow strength. You respect weakness. You step aside from confusion. And over time, with enough quiet repetition, you become unbreakable. Not because you never lose, but because no single loss, no single day, no single stretch of dull markets can shake you from your foundation. You stand firm. You wait. And when the moment is right, you act without hesitation. That is the long road. That is the real secret. And if you walk it with discipline, the market will, eventually, pay you for your patience. Eventually, you begin to notice something subtle. The market has not become easier. The swings are still there. The traps are still there. The sudden reversals still happen without warning. But they do not shake you the way they used to. You are no longer trying to predict every turn. You are no longer trying to be the smartest person in the room. You are simply responding to what is in front of you. That shift changes everything. You used to believe that success in trading meant forecasting correctly, calling the top, calling the bottom, impressing yourself with perfect timing. But forecasting is a dangerous obsession. It feeds your ego. It makes you feel clever when right and humiliated when wrong. It turns every trade into a personal statement. The profitable trader does not need to predict the future. He needs to recognize when the present is clear. There is a difference. You have watched a market start to rise and told yourself, it can't go much higher. You shorted it because it felt extended, and it kept climbing. You have watched a market fall hard and thought, it must bounce. You bought too early, and it kept falling. Those losses came from opinion, not observation. Opinion says, this should happen. Observation says, this is happening. The market rewards observation. When price is moving higher with strength, it does not matter how high it has already gone. What matters is that buyers are in control. When price is sliding lower and rallies are weak, it does not matter how cheap it seems. What matters is that sellers are dominant. You must learn to align yourself with what is, not what you wish to be. That requires humility. You will never know everything. You will never see every move coming, and you do not need to. You need only to recognize when the weight is on one side. And once you see that weight, you must have the courage to act. Courage in trading is not about taking big risks. It is about taking the right risk when the moment is clear. You have hesitated before. You saw a strong setup. You knew it fit your rules. But because of a recent loss, or fear of being wrong again, you passed. Then the move unfolded exactly as you expected. That pain is different. It is not the pain of losing money. It is the pain of doubting yourself. That is why protecting your confidence is so important. When you follow your rules and take a small loss, your confidence remains intact. You did your job. When you break your rules and take a loss, your confidence erodes. Now, you question your judgment. Consistency in execution builds trust in yourself, and that trust allows you to act decisively when opportunity appears. Decisiveness does not mean recklessness. It means clarity without hesitation. When the market lines up with your conditions, you enter calmly. You do not rush. You do not overthink. You execute. And once in, you manage the trade according to your plan. If it moves in your favor, you let it develop. If it invalidates your premise, you exit. No drama, no storytelling, no stubbornness. Over time, this disciplined repetition does something powerful. It removes fear. Not completely, You will always feel something when money is at stake, but the fear becomes manageable because you know your risk is controlled. You know that one trade cannot destroy you. You know that a string of small losses is part of the process, not a verdict on your ability. And that knowledge steadies you. The market often tests you in ways that feel personal. It gives you a quick win and tempts you to get aggressive. It gives you a sharp loss and tempts you to chase. It moves without you and tempts you to jump in late. It stalls and tempts you to force action. Each temptation is an invitation to break your discipline. The profitable trader sees these temptations for what they are. He recognizes that the market is not attacking him, it is simply moving. It is his own impulses that create the feeling of conflict. When you stop taking the market personally, you gain distance. Distance allows perspective. Perspective allows patience. And patience is where your edge lives. There will be times when you feel like nothing is working. You follow your plan, you take small losses, the market chops around, you question whether your method is flawed. In those times, you must evaluate calmly. Are the market conditions unfavorable for your approach? If so, reduce size or step aside. Or are you subtly bending your rules because you are frustrated? Be honest. There is a difference between a strategy experiencing normal drawdown and a trader abandoning discipline. If you stick to your rules through a tough period and keep losses small, you will survive to see favorable conditions return. But if you let frustration push you into larger risks, you may not. Survival is not glamorous, but it is everything. Many traders do not fail because they lack intelligence. They fail because they do not survive long enough to refine their craft. They take one big loss that cripples their account, or they burn out emotionally after a string of reckless decisions. You must be relentless about protecting yourself. Size your position so that a loss is uncomfortable, but not devastating. If a single trade keeps you awake at night, it is too large. If you find yourself staring at every tick because you are overexposed, you have already made a mistake. Trading should not feel like a life or death struggle. It should feel like a calculated business decision. When you right-size your trades, you free your mind. You can think clearly. You can hold through normal fluctuations. You can exit calmly when wrong. This clarity compounds over time. You begin to notice subtle shifts in behavior. You catch yourself before you act impulsively. You pause when emotion flares. That pause is powerful. In that brief space between impulse and action, you choose discipline. That is where the transformation happens. It does not happen in one dramatic moment. It happens in thousands of small decisions where you choose restraint over reaction. You choose evidence over hope. You choose patience over urgency, and slowly you become different. The market still moves the same way it always has. Fear and greed still drive it. Trends still build and break. Crowds still chase and panic. But you are no longer swept away by those currents. You observe them. You wait for alignment. You act when the weight is clear. You accept losses without resentment. You ride gains without euphoria. You treat each trade as one of many, not as the trade that will define you. That mindset removes pressure. And when pressure is removed, performance improves. You stop trying to make every trade count. Instead, you let the law of probabilities work in your favor over time. Some trades will fail quickly. Good. They cost you little. Some trades will work modestly. Fine. They add steadily. And occasionally, a trade will unfold into something substantial. Those are the ones that matter. But you will only catch them if you are present, disciplined, and unburdened by recent emotional scars. This is why the long pull matters. Years of repetition, years of refining your response to the market, years of learning not to overreact. End quote. There is no shortcut to this maturity. You cannot buy it. You cannot download it. You earn it through experience and honest self-examination. At some point, you will look back at your early days and barely recognize yourself. The frantic entries, the oversized positions, the desperate attempts to recover losses. You will see how much of your struggle came not from the market, but from your own impatience. And you will feel a quiet satisfaction, not because you have conquered the market, but because you have conquered yourself. That is the true victory. The market remains what it has always been, unpredictable in the short term, patterned over time, driven by human emotion. You cannot control it, but you can control how you meet it. With patience, with discipline, with respect. You show up, You observe. You wait for the line of least resistance. You enter lightly. You add only if confirmed. You cut losses without hesitation. You sit on winners as long as the evidence supports them. You step aside when conditions are unclear. You review your decisions honestly. You protect your capital fiercely. You guard your confidence carefully. And you repeat, day after day, month after month, not chasing excitement, not demanding perfection, just executing your game with quiet consistency. Eventually, this becomes who you are. You are no longer the trader who needs constant action. You are the one who waits. You are no longer the trader who argues with the tape. You are the one who listens. You are no longer the trader who doubles down on hope. You are the one who exits when wrong and moves on. That is the evolution. It does not happen overnight. But if you commit to it, if you accept that the real work is internal, if you embrace small losses and long periods of waiting as part of the craft, you will endure. And endurance, over time, becomes advantage, because most will not last. Most will quit, or blow up, or chase the next shiny method. You will still be there, calm, selective, prepared. And when the market offers the kind of opportunity that comes only a few times a year, you will recognize it. Not because it is flashy, but because it aligns perfectly with the conditions you have learned to wait for. You will act without fear. You will hold without panic. You will exit without regret when the move is done. And you will step back again, patient, disciplined, unbreakable. That is what profitable traders know. Not a trick, not a shortcut, a way of being, a way of thinking, a way of acting. And once it becomes part of you, the market is no longer a battlefield. It is a field of opportunity, one that rewards the steady, the disciplined, and the patient. You no longer chase it. You let it come to you, and when it does, you are ready. There is another truth that settles in after enough years. The market does not care how long you have been trading. It does not reward effort. It does not reward intelligence. It does not reward how badly you need the money. It rewards alignment. You can sit in front of the screen for 10 hours a day and make nothing. You can study until your eyes ache and still misjudge a move. You can want it more than anything and still be wrong. That is humbling. And humility is not weakness here. It is protection. When you finally accept that the market owes you nothing, you stop trying to extract something from it every day. You stop forcing trades because you feel you deserve a win. You begin to understand that some days are simply not yours. On those days, price moves in ways that do not fit your rhythm. It whips back and forth. It fakes strength. It fakes weakness. It traps both sides. If you insist on trading those conditions, you will slowly grind yourself down. But if you recognize them early and step aside, you preserve your edge. That is maturity. You no longer measure your success by daily profit. You measure it by the quality of your decisions. Did you wait for clarity? Did you avoid low probability trades? Did you control your size? Did you exit when wrong? If the answer is yes, the day was successful, even if your account did not grow. This way of thinking separates you from the gambler. The gambler needs action. He needs stimulation. He feels alive when he is in a trade. The professional feels alive when he is in control. Control over risk, control over emotion, control over participation. You have felt the exhaustion of overtrading, the mental fatigue that comes from constant decision-making, the emotional swings from rapid wins and losses. That fatigue clouds judgment. When you are tired, you cut winners too soon. You hold losers too long. You miss clear signals. The profitable trader respects his mental capital as much as his financial capital. He knows that clarity is a resource. If the market is not offering clear opportunity, he does not waste that resource. He rests. He observes. He waits. There is power in conserving energy. The market operates in cycles. Quiet periods give way to expansion. Complacency gives way to volatility. Stability gives way to shock. If you burn yourself out during the quiet phases, you will not have the sharpness required when the expansion comes. Think about the times you performed best. You were not frantic. You were not desperate. You were focused and calm. You saw a clear move developing. You entered with defined risk. You let it work. There was no rush, no panic, just execution. That state is not an accident. It is cultivated. You cultivate it by trading less, not more. You cultivate it by accepting boredom. Yes, boredom. Most traders cannot tolerate it. When the market is slow, they feel uncomfortable. They scroll, they search, they lower their standards just to feel engaged. But boredom is part of the craft. If you can sit through dull conditions without forcing action, you preserve your strength for when it matters. The predator does not chase every sound in the forest. He waits for the right moment. You must become that patient. Over time, you also learn that losses are information. A clean loss tells you something about the market's current character. Perhaps momentum is weak. Perhaps breakouts are failing. Perhaps volatility is shrinking. If you take a small loss and observe that similar setups are not following through, that is not a reason to double down. It is a reason to step back and reassess. The market is always speaking, not in words, in behavior. Are trends extending or reversing quickly? Are pullbacks shallow or deep? Are strong moves being defended or erased? These clues guide you, but you can only see them if you are not blinded by emotion. Emotion narrows your vision. It makes you focus only on your position, not on the broader picture. When you detach from individual trades and focus on overall conditions, you gain perspective. And perspective is where your advantage lies. You also come to understand that size is a weapon that must be used wisely. When conditions are unclear, trade small or not at all. When conditions align perfectly with your approach and the market confirms your thesis, you can press slightly, not recklessly, but with confidence born of alignment. This gradual scaling, this measured aggression, is far different from impulsive over-leveraging. It is controlled, and control compounds. As you continue down this road, something interesting happens. Your emotional swings diminish. A win no longer makes you feel invincible. A loss no longer makes you question your ability. You view each trade as one sample in a long series. You think in probabilities, not certainties. You understand that even your best setups can fail, and that even mediocre trades can occasionally work. So you stop assigning too much meaning to any single outcome. This detachment is not coldness. It is clarity. Clarity allows you to act without hesitation when conditions align. It allows you to exit without regret when they do not. It allows you to sit out without feeling inferior. You begin to see that the market is less about constant action and more about selective participation. You are not here to trade every day. You are here to trade well. There is a profound difference. Trading well sometimes means not trading at all. It means letting others fight over scraps while you wait for the feast. It means being comfortable watching a move unfold without you because it did not meet your criteria. It means understanding that missing a trade is far less damaging than forcing one. You will miss opportunities. That is inevitable. But missing them does not harm you. Forcing trades does. Over years, these small disciplines build a foundation. You develop a rhythm with the market. You recognize when conditions are shifting from quiet to active. You sense when momentum is building or fading. You no longer react to headlines or sudden spikes. You observe how price responds to them. Does it hold gains? Does it give them back quickly? The reaction tells you more than the event, and you position yourself accordingly. This is not about being perfect. It is about being consistent. Consistent in risk, consistent in execution, consistent in patience, and consistency leads to steadiness. Steadiness leads to confidence. Confidence leads to decisive action when opportunity appears. At this stage, you are no longer searching for secrets. You are refining habits. You are tightening your discipline. You are deepening your understanding of your own tendencies. You know when you are most vulnerable to mistakes. After a big win, after a sharp loss, after a long flat period, you guard against those moments. You reduce size when necessary. You take breaks when needed. You respect your own limits. That self-respect is part of mastery. It means you are not trying to prove anything, not to the market, not to other traders, not even to yourself. You are simply executing your craft. The market becomes less of an emotional battlefield and more of a landscape you navigate calmly. There are storms. You wait them out. There are clear skies. You travel efficiently. There are uncertain conditions. You stay put. You do not curse the weather. You adapt to it. And in that adaptation, you find longevity. Longevity is the ultimate edge. Because the longer you remain disciplined and solvent, the more chances you have to catch the meaningful moves. The market will always offer them, but only to those who are prepared. Preparation is not about predicting. It is about positioning yourself so that when the opportunity arrives, you have the capital, the confidence, and the clarity to act. And when you act, you do so without hesitation. Not because you are certain, but because you are aligned. That alignment is the quiet secret. You are no longer fighting the market. You are flowing with it. You are no longer trying to outsmart every fluctuation. You are waiting for the path of least resistance and stepping onto it. You are no longer obsessed with daily results. You are focused on long-term consistency. And in that shift, you become something different. Not just a trader, a disciplined operator. Someone who understands that success here is less about prediction and more about behavior. Less about speed and more about timing. Less about excitement and more about patience. When you reach this level of understanding, the noise fades. The chatter of other traders no longer distracts you. The hype around sudden moves no longer pulls you in. You see them for what they are, temporary surges of emotion. You remain steady. You remain selective. You remain prepared. And as the years pass, that steadiness compounds. Your capital grows gradually. Your confidence deepens. Your reactions slow down. Your decisions sharpen. You have become the trader who can sit through quiet periods without doubt, who can take small losses without anger, who can ride strong trends without fear, who can step aside without regret. That is mastery. Not loud, not flashy, but durable. And durability is what wins this game, because the market will always test you. But if you have built your foundation on patience, discipline, and self-awareness, those tests will not break you. They will simply confirm what you already know, that the real secret was never hidden. It was always in your ability to control yourself, to wait, to act only when the odds are in your favor, to accept being wrong quickly, to let being right pay you fully, and to repeat that process quietly and consistently for as long as you choose to play. That is the path, not glamorous, not easy, but steady. And if you walk it long enough, you will find that the market does not need to be conquered. It simply needs to be respected. Respect it. Respect your capital. Respect your discipline. And the rewards will come, not in bursts of excitement, but in steady, compounding progress. You will look back one day and realize that the greatest change was not in your account. It was in you. You became patient. You became selective. You became unshaken. And that is why you endure. That is why you prosper. Not because you found a trick, but because you mastered the only thing that truly mattered, yourself.